Many people are now talking about a possible economic slowdown. While no one knows for sure, several signs are making people worried. Some are spending less, companies are delaying their decisions, and global events are creating a lot of uncertainty. During the COVID-19 pandemic, governments spent a huge amount of money to support their economies. That spending helped people and businesses stay strong for a while. But now that money has been used up, and many countries are still dealing with debt. This situation makes future growth harder to achieve. Interest rates are going up in many places to fight inflation. Inflation means prices are rising and people's money doesn't go as far. When interest rates go up, it becomes harder to borrow money. This affects both families and businesses. If borrowing slows down, economic activity slows too. In many businesses, leaders are saying they won't follow the same plans they made earlier. They want to wait and see what happens. They don't want to take big risks right now. When businesses act cautiously like this, it can be a sign that a slowdown is coming. The COVID-19 recession was very short. Some experts don't even count it as a full recession. Now, if inflation stays high and borrowing becomes harder, it could lead to more serious problems, especially with credit. People and companies who borrowed money might struggle to pay it back. Markets are also reacting. Prices of stocks and other assets have gone up and down quickly. This is usually a sign that investors are unsure about the future. They don't know how companies will perform or how governments will act. People still have jobs and wages for lower income workers have gone up. That's good. But if businesses start laying off workers, everything could change. Consumers might start saving more and spending less, which would slow down the economy further. No one wants a recession, but if it happens, we hope it will be short. One way to reduce uncertainty is to fix trade and tariff issues between countries. Trade deals can help businesses plan better, create jobs, and lower prices for consumers. Trade is not simple. Trade deals are often thousands of pages long. Each product, industry, and region has its own rule. Many countries protect their farmers or factories from competition. These protections can cause arguments and make trade deals harder to finalize. When trade becomes harder, small and medium-sized businesses suffer the most. Big companies often have enough money to handle problems, but smaller ones depend on stability and good access to markets. The 2008 financial crisis was different from today. Back then, the banking system had too much debt, and the housing market collapsed. Today's problems are more about inflation, global politics, and economic decisions made during and after COVID-19. The banking system now is stronger than before, but there are still many concerns. Global tensions, large government debts, and rising prices are serious challenges. Countries are also changing how they trade with each other. This adds to the uncertainty. Some people believe trade with countries like China has been unfair. For example, China gives financial help to its companies, making it harder for others to compete. Also, the way taxes and trade rules work can be confusing and unequal. It's okay to say we want fairer trade. At the same time, we should remember that the U.S. economy is still the strongest in the world. On average, Americans earn much more than people in many other countries. That gives the U.S. a strong position. When tariffs were raised in the past, it surprised many people. It caused prices to rise and growth to slow. That's why future trade negotiations need to be smart and handled by professionals. These agreements take time, but they can make a big difference in calming markets. Trade wars, where countries raise tariffs against each other, can make things worse. They increase prices and make investors nervous. It's better for leaders to talk and work on solutions. In the next couple of months, companies will share their financial results. They'll also talk about how tariffs and other global issues are affecting them. Some will say they're doing well. Others will show they're struggling. This information helps us understand the real impact on the economy. These earnings reports will also influence investor behavior and market expectations. Businesses may revise their future plans based on how these issues are playing out. It's a chance to see how much stress different industries are facing. When markets are unstable, people hesitate to invest. Credit becomes more expensive, and businesses have to pay more to borrow money. This adds pressure to the whole system. Small businesses suffer the most as they often don't have large cash reserves. Investors, unsure of what will happen next, tend to pull back. The result is slower economic movement across all levels. Still, the U.S. remains a strong country. It has innovation, rule of law, and a powerful military. These strengths attract investment and keep the country stable. But constant uncertainty can hurt confidence. When people feel unsure about the future, they stop taking risks. Even strong fundamentals can weaken if fear continues to grow. Stability in leadership and policy is crucial to keeping momentum. To reduce this uncertainty, leaders should focus on resolving trade and global disputes. When businesses feel confident in the future, they invest more. That creates jobs and growth. It's also important to protect key industries like medicine, technology, and defense. Relying too much on other countries, especially potential rivals, is risky. We need secure supply chains for important goods. Some industries are more critical than others. For example, making shoes overseas may not be a problem, but depending on other nations for things like semiconductors or antibiotics could be dangerous. National security and economic health are closely linked. If current wars and tensions in the world are resolved, that would be a big help. Peace in Ukraine and stability in the Middle East would reduce uncertainty. A united Western world is stronger than a divided one. There is a risk that countries like Russia, China, North Korea, and Iran want to weaken Western unity. If that happens, it could hurt economies and make the world more dangerous over time. That's why building strong partnerships with allies is so important. Europe, Japan, Korea, the Philippines, and others can work with the US to create a stable, fair trading system. That would also be a strong message to China and others that unfair trade won't be accepted. We don't want to look back in a few decades and say, that's how the West lost its influence. We need to act now to stay strong and united. China has done a lot to grow its economy, lifting many people out of poverty. But some of its actions have made neighbors nervous. Countries like Japan, India, Vietnam, and others worry about China's behavior in the region. China should listen to these concerns and think about how its trade practices affect the world. Dumping products at low prices or using subsidies can create problems in global markets. America should not be afraid. It has many strengths and can lead by working with others. Cooperation is better than conflict. Leaders from the US and China should talk, not argue. The first step is simple. Call, meet, listen. Real change can start with a phone call. Both sides should try to understand each other's goals and concerns. Respectful discussion can avoid misunderstandings. When it comes to national security, the US should rely on itself or its close ally. Fair trade is also important. If rules are unfair, they should be fixed. But not every issue is a crisis. It doesn't matter much where we get furniture or shoes, but it matters a lot where we get our medicines or computer chips. We must focus on what's truly important. The Western world should negotiate together. If the US, Europe, the UK, Japan, and others form a strong economic team, they can set fair rules and stand firm against unfair practices. A stronger Europe also helps. Right now, Europe's economy is weaker than America's. But with changes in rules and more investment, they can grow faster. That's good for everyone. Fragmenting the Western world would be a mistake. In the past, when countries acted alone, it led to conflict. Working together is safer and more successful. In the long run, investing in a strong economy, fair trade, and global cooperation benefits everyone. That's the goal we should focus on. Like and subscribe to our channel for more insights like this.